Hey traders, Jason here from Levitt Brothers. This is one part of a short series where I'm going to be talking through some trades. Instead of doing like a 30-minute video, I'm going to break it up into smaller bite-sized chunks. Everyone should build a library of trades they've done and charts they're following, which can then be studied. Okay, this is essentially what I'm going to be doing here, just talking through charts and setups and trades. If you do this enough, you'll train your eyes to see opportunities. Okay, you'll train yourself in how to manage trades. Trades tend to fall into two different categories. Either the market is doing really well and charts of individual stocks are doing well, so you don't have to be overly detailish with entries. You just need a pretty good entry. Okay, in this case, striving for perfection will cost you. Or the market is less clear, so we need to be more technical and exact with entries. So some of these charts have exact entries. Others I'm just getting into because everything looks great and I don't need to be overly exact with everything. All right, so let's go through it. So here's ACHR Aviation. We had this coming out of a base here. You can see like lows here. You can call that a double or triple bottom. Comes out here, but then it doesn't go very far. It pushes up a little bit, but then immediately settles into another consolidation pattern, somewhere like that. This is common. Okay, it's not something to be alarmed by. Not every stock is going to come out of a base and immediately rally to a high level and get separation. Sometimes stocks require so much energy to break out of their base that as soon as they break out and push a little bit higher, they immediately need to move sideways for a little bit of time to restore their energy. And that's what happened here. Okay, ACHR moved up, consolidated between converging trend lines for a few more weeks, and then as you can see, it went up again. So if you're a short-term trader, this is probably a good place to be active. If you're a swing trader, it's a little frustrating to hold through a period like this. But as long as the stock acts okay, and as long as it just doesn't completely crap out on you, you could hold it. Okay, volume looks pretty good. Everything looks pretty good. Moving average is coming down and starting to curl up. There's a reason to hold, and of course, the fact that it went from the low threes all the way up to like the high fours, that's more luck than anything. You can't expect that to happen. But if you play good charts under the right conditions, this does happen quite often. All right, next up, AMSC. So this stock we have came down off of a low, or came down off of a high. We got double bottom here, as you can see. Moves up. I personally like when this happens, when the stock has a nice rally, which took place here, back-to-back up days. And then here's the 21 EMA, which is the orange line, and then the blue line is the 50. I like when they move up and then they consolidate between the moving averages. Okay, so the first move up, you get above the 21, which is like step one. And then for it to get rejected by the 50 is perfectly fine with me. Let it get squeezed between the moving averages for a week, maybe a little bit longer, restore some energy, and energy starts, potential energy starts to build up within the pattern, and then often you get an explosive breakout, which we did get an explosive breakout right here on volume, but it didn't go anywhere, as you can see. It just settled into a sideways consolidation, formed another pattern here, okay, but not completely alarming. The 50-day moving average was still moving down at this point in time, so the stock seemed to need a little bit more time to allow the 50 to flatten out and then start curling up. Once it started curling up, then we got another breakout here, but that one didn't hold either. It came all the way back down, tested the 50 one more time, moved off the low, consolidated right here for a few days, and then finally broke out. Okay, there's nothing alarming about what took place with this trade. Sometimes stocks break out at the wrong time. Sometimes maybe this happened because there was good news somewhere else in the semiconductor space, but this particular stock wasn't quite ready to go, so it needed more time. Or maybe this happened, again, for good news, but the stock wasn't quite ready to go. Okay, maybe the stock needed more time, but there was good news with one of the other stocks or the group or the market or something was going on that caused the stock to temporarily break out, but it wasn't ready. So the fact that it came down and tested the 50, moving averages start curling up a little bit and goes again, that's fine. Okay, that's trading. You don't want to try to put everything in a nice, neat box when you trade because you'll end up missing pretty good opportunities. Next one, BWXT. This one acted really well, came out of a base, resistance level here. You can see kind of a cup and handle-ish pattern right here, broke out, tons of volume here, tons of volume here, tons of volume here. And as you can see, it came up to here, resistance line. This was earnings. Okay, step aside, see what happens. But the fact that it like had earnings and it dropped a bunch, but then we have an inside day, another inside day, and then that candle there takes out all the previous 3 candles, like that's a good sign. Whatever earnings were, there was an immediate negative reaction, but within a few days it was forgotten and the stock went up. For this one, our target was 135, which as you can see was hit before the stock dropped back. Next up, CAVA. This one's been a little bit tougher because the stock moves so steadily. You can see over here it's just like steady, steady, steady. Like me, I prefer like some up and down movement where I can actually judge it instead of just like a grind. So it made it a little bit harder. So we had this as like a play right here where we had kind of this cup and a pause here, and I was looking for a breakout here. It broke out, didn't get any separation, immediately came back down, found some support at the 21, then it rode its 8 up, came back down, found some support at the 21, and then moved up again. Our target on this was 150, which was hit a couple days before earnings caused this big gap up. So my experience with CAVA is that you can buy it on a dip, and you want to just hold it when it's going to grind and just keep a stop in place. But I find that it's a hard stock to trade if you're looking for like good entries, because it lacks like really good smooth up and down motion. CIFR, this was a crypto name. It did really well for us. It came out of a base here, tons of volume over here, and then you can see here it consolidated. And this to me is beautiful, okay? For it to rally, for it to come out of a base, rally relatively strongly on big volume, come up, get a resistance level here from a previous key level, and then consolidate like this for a couple weeks and then break out again, that's picture perfect, okay? It's an automatic. You definitely want to be buying dips here. Buy dips, add on a breakout, ride it up. Everything about this chart looks great. You can see it rallied up really nicely, came down, tested the 21, and then rallied again. Okay, it's a great sequence to look for. You can make a lot of money. Tends to be some safety in there, especially when the market conditions are very good. CleanSpark, another crypto name, came out of a base here. Resistance here is not too clean, but I'll just simply draw it there at $10. You can see whether you call this like a double or triple bottom, doesn't really matter. Comes out of the base, huge volume, and then it comes up to a previous key level here at 13. So everything's looking good. You can see this is trading between 13, 11, and you're looking for a breakout. On that particular day, it gapped up and immediately gave it back. So there's not really a trade there. If you chase that, then you end up getting stopped out for a small loss, which is fine. It happens. Comes all the way back down, tests 10, which is a key, which is a big fat whole number. It tests the 50-day moving average, which was moving flat at the time, and then you can see it moved up. Okay. One of the things you should learn about this, and again, the purpose of this is to collect a library of these charts and study them so you can train your eye, that just because the stock couldn't break out over here doesn't mean it's a bad stock. It just came down one more time, test a key level, and then it was still good to go. You don't have to remove it from your list just because it didn't work that first time. Okay. If you don't trade it, that's fine, but you can still monitor day after day and say, hey, I get some key levels down here. I get this base over here that should act as support. I got $10, which is a big fat whole number. It should act as support. I got the 50-day moving average, which had come down and flattened out. There's a lot of stuff coming down here. So if the stock comes down here and finds support and bounces there, that's a good low risk entry. And first target would probably be the bottom of this range here. Second target would be the top of the range. And then if it goes, it goes. But a really good sequence here, definitely a tradable pattern. Stock can go nowhere over time, okay, but there are little trades in between there. SOUN Okay, this is another one where it tried to break out, but and ultimately worked, but it needed one more dip. So you can see we had this one posted at Lever Brothers. See, it breaks out there. Volume really, really good there. Got some decent separation, but you can see lots of overlapping candles here. So kind of frustrating. There's a dip back to the 50 here. Then we finally have, right over here, we have like a breakaway day where it finally breaks out, registers like a 3-month high, volume really good, everything looking great, but then it came all the way back down and tested the 50. So this is one of those stocks that you get in, you're kind of frustrated for a little bit, but it finally seems to catch a bid. Everything is looking great, new high, not new high, but higher high, good volume, and then you end up just getting stopped out, and it sucks. Okay, but you keep it on your list. It came back down. It found support at its 50. It found support at a previous low, and then it moved up. Okay, this happens. Okay, it happens. Sometimes stocks break out and they're not quite ready to go, and you need to just take your profit and then continue to monitor them. And sometimes you get another entry a few days later or a few weeks later. Okay, again, don't try to fit everything into a nice, neat box. It doesn't work like that. Sometimes you have a false breakout, stocks come back, do some backing and filling, and then you could play it after that.